I think on a short-term basis, the Aussie dollar is likely to remain weak for a couple of other reasons. Well, firstly, iron ore prices. You've seen in the last couple of months, iron ore prices basically collapsing from like $95 per ton at the beginning of the year to $60 right now. And from what we see, we think there's a very good chance that iron ore prices might drop to about $55 per ton. If you look at the correlation between iron ore prices and the Aussie dollar, the correlation is actually quite high. So that basically means that if iron ore prices drop further, there's room for the Aussie dollar to actually correct a little bit more. Second reason is the deleveraging in China that's going on at the moment. I think in the last 2 weeks, we've gotten all sorts of news reports coming out from China that the government is tightly enforcing the deleveraging regulations that they actually put forth in 2015, a couple of years ago. With that enforcement, that basically means that any growth in fixed asset investments, etc. in China itself, any growth in the property market, any more further investments in the property construction market is likely to be capped. That's one of the reasons why the Aussie dollar has also been quite weak. So if you put all those factors together, on a short-term basis, it's going to be very hard for the Aussie dollar to actually sustain its movement upwards. In fact, we think there's room for it to actually correct down to about 73 to 72.